你好，我是陈先生。英国的房价到底会不会崩盘？到底什么时候崩盘？因为大家一直没有发现房价开始下跌，现在我们来看看专家怎么说。
The UK housing market has been in a state of turmoil since the government's mini-budget, with mortgage deals taken off the market and interest rates predicted to continue rising in the coming months. So what does it mean for house prices? Well, new research from Oxford Economics suggests they are currently overvalued by around 30% and likely to fall. Well, joining me now is Andrew Goodwin. He's Chief UK Economist at Oxford Economics. Andrew, welcome to you. House prices overvalued by a third. How do you reach that conclusion?
That's right. It's really a calculation that we've made based upon mortgage affordability and the affordability of repaying a mortgage. And we've seen such a big increase in interest rates over the last sort of 2.5 weeks in particular, but also sort of a build up in rates earlier in the year, that we've gone from a situation where prices were reasonably fairly valued at the start of the year to a situation now where they're about 30% overvalued. And so that's purely because of the big increase in interest rates we've had.
So when you're talking about reasonably valued, this is you're looking specifically at not at affordability of property prices, but at the ability of households to service their mortgage debt.
That's right. We've really compared it to the average of the past 20 years, and there's been a significant deterioration in that affordability recently. Obviously, for a large part of the last 10 years or so, mortgages have been very cheap for those who've been able to actually obtain them. But the very big increase in sort of swap rates we've seen has then driven quite a big increase in the rates available to actually get for households, and that means that the mortgages are far less affordable than they have been.
Yeah, interestingly, you're suggesting this doesn't necessarily point to a housing market crash in the near term.
No, I mean, I think certainly in the near term we'd expect transactions to fall quite substantially. Obviously, if you're thinking about getting a new mortgage now, it's going to be 2 or 3% higher, more expensive than it would have been sort of 3 or 4 months ago. So that's a big change and something that will restrain demand. But in terms of sort of what will cause prices to crash, really it sort of depends on sort of the number of people that are forced to sell. And because so many people have fixed rate deals in place, we think the impact of higher rates will come through relatively slowly. And therefore, the number of people who are actually forced to sell maybe won't be as large as it has been in previous house price downturns.